Hello YouTubers and welcome back to my channel. Are you sick of chasing price levels that crumble under pressure? Tired of getting played, fooled, and humiliated by market reversals that seem to defy all logic? Yeah, you're not alone. But guess what? Today, that pain ends. My name is Pablo Espinal, and in this video, I will show you battle-tested, certified, and scientifically backed techniques to help you slaughter false signals, vaporize volatility, and crush resistance like a true pro. If you like this type of content, don't forget to like and subscribe. Okay, let's do this. Okay, let's start by exposing the truth about support and resistance. Support and resistance levels aren't just lines, they're battlegrounds. It's where buyers and sellers go to war, and only one side comes out alive. The more often a price hits these zones, the more traders trust them until they snap and trap everyone inside a nightmare. On higher time frames, these zones reveal the hidden footprints of institutional money. Follow those, and you follow power. Next, let's look at historical price levels and unlocking the past to survive the present. The market remembers its scars. If a currency collapsed at 1.2000 months ago, that trauma lingers. The next time price nears that zone, emotions flare and chaos returns. Smart traders scan past charts for historical bloodbaths. They do this because where price broke down before, it could break again. Write that down. Don't trade blind. Study the past and arm yourself for the next strike. Next strategy is to draw trend lines to slice through confusion. A crooked trend line, that's a death sentence. But a precise, clean trend line, that's your weapon. Write that down. Here's how to wield it. In uptrends, draw support lines under the price. In downtrends, draw resistance above. Pair trend lines with moving averages, and you'll expose ambush zones before they strike. The next strategy I have to mention is moving averages, or as I call them, the shape-shifting barriers. Support and resistance aren't always horizontal. They move, they adapt, they deceive. Enter moving averages. The 20, 50, and 200-day EMAs are used by insiders to trap retail traders. Price bounces off them in trends, but when they break, that's your cue to run or strike. This next strategy is all about psychological price points, aka where traders lose their minds. Round numbers are emotional death traps. Levels like 1,000 or 1 point in 2,000 act like magnets for fear, greed, and recklessness. Price tends to reverse violently near these zones because everyone's watching and everyone's emotionally invested. Don't be gullible. Read the emotional tension behind those digits and plan your attack ruthlessly. Next, let's touch on pivot points, as they are the underground level detection tool. Pivot points are the secret map that smart traders use to avoid getting slaughtered. Built from previous data, they highlight natural support and resistance points. Combine them with Fibonacci levels, and you get zones that can survive market meltdowns. If you're not using pivots, You're walking through a minefield, blindfolded. The Fibonacci retracements are nature's weapon for traders, and they are our next strategy. 38.2%, 50%, 61.8%. These aren't random numbers, they're nature's code. Fibonacci reveals where price might snap back before brutalizing resistance or vaporizing support. Combine with volume, and you'll know if institutions are backing the move, or if it's a trap. The next strategy is the bounce method, also known as timing the retaliation. When price hits support or resistance and bounces, that's your moment, but don't go in reckless. Wait for confirmation, bullish or bearish, candlestick patterns, volume spikes, RSI, or MACD agreement. A bounce without confirmation, that's bait. Wait for the real move. Next, let's talk about breakouts and breakdowns. A breakout is the market screaming, "I'm going somewhere," but most breakouts, lies, meant to trap the gullible. Here's the antidote. Only trust breakouts on high volume. Wait for candle closes, not just price spikes. Use pivot points and round numbers for confirmation, and never trade breakouts during hazardous news storms. The next strategy is to dodge false breakouts with laser accuracy. To avoid getting slaughtered, confirm with RSI, MACD, and volume. Look for trap wicks, those long shadows that signal reversal. Use stop losses just beyond the level, and always check the news calendar before jumping in. Every false breakout is designed to destroy retail traders. Don't be their next victim. Do not forget about volatility control, so you will survive the storm. Volatility is the hurricane that wipes out the unprepared. To survive, use moving averages to smooth the chaos. Study price action and candle behavior. Reduce position sizes near high volatility zones. Don't let over leverage turn you into a statistic. Let's touch on volume analysis, as it is the truth serum of trading. Price can lie, volume doesn't. Bounce with no volume, weak. Breakout with no volume spike, fake. Volume is your truth detector. If big money isn't moving, why should you? Watch out for rookie mistakes that wreck traders. Want to get wrecked fast? Just do this. Overtrade levels without confirmation. Ignore volume, trade against the trend, and get pissed off and chase losses. These are the pitfalls that lead to humiliation, blown accounts, and emotional breakdowns. Don't be another Forex casualty. Let's look at role reversals real quick. Support becomes resistance. Resistance becomes support. It's not magic. It's market psychology. When a level breaks, wait for a retest. If it holds the new role, it's real. Trade it with ruthless precision. Okay, that's it for this one. Thanks for watching, and see you on the next one.